Greetings, everybody. This is Jeff Scott. Welcome to this week's top-down review. For those that are new to this, I video this in 4K. It may take a while for YouTube to give you a higher resolution feed, and you need to go down to the lower right-hand corner in YouTube where there is a gear. Let me show you what I'm talking about. Oh, I just want to open one window here. Let's see if I can do that without opening up everything. Nope, opened up everything. In YouTube, fortunately I've got good internet access today. Pause for a second. All right, in YouTube what you want to do is open up your video. A couple of things you can do for me. One, please subscribe. That way you'll get notification of when I put these out. The other thing you can do is, you see this little gear here? If you click on that gear, you open up quality. If you left click on the gear, I'm sorry. And then you could change the resolution. And on mine, the resolution should go all the way up to 720 or higher. And it'll certainly be much clearer. The other thing is, if you can click the up thumb, that would make me happy as well. At least let me know people are watching this and appreciate the time that I put in. So I titled today, Markets Melt Up on Employment Numbers, and then I asked the question, which we'll continue to look at during this video, is can too bullish mean bearish? My name is Jeffrey Scott, and this is my email address. Please feel free to contact me. As always, it's for education purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, so keep that in mind listening to me. I'm independent. I paid for the tools that I use. I don't take any advertising or promotional funds. And trading involves risk. You and your owner are solely responsible for any investment decisions you make. I often talk about options, and if you're not an options wizard, you should be looking at the Options Industry Council for their disclaimer of the risks involved. I haven't had an opportunity in the last year to do much education for weekend events, and certainly COVID is interfering. But when I do my educational programs, I entitle them Be Your Own Guru. I take what I've learned from Can Slim, starting with O'Neill, improved by Morales and Catcher, Ian Woodward, and others, and then how to actually trade from John Person. And I picked up a lot of things along the way from Cigar, from Zero Profit, Van Tharp, Money Management, and my buddy, recently passed away, George Lee. I think that each of you, it's your responsibility to take care of yourself and become your best that you can be. And you do that by reading, getting educated, and then melding all that together in a way that works for you. I own a lot of tools. This is actually an older sheet, but basically I need TradeStation, Thinkorswim in my indicator packages. Hgsi is the nucleus or the brains of my weekend and nightly review. EdgeRater automates a number of things for me. And then I should have put here my Q tools, my Dr. K seasonal tools. Those are some of the other things that I use as well. For those not familiar with Hgsi, this is not my company. Highgrowstock.com is the website, free 30-day trial. Under investing strategies, you'll see hundreds of movies by myself and Ron Brown. So I always start every day asking, where is the market? Where's the industry group? Where's the stock on this curve? Boy, what a move since March 23rd. The issue becomes, when do we roll over versus when do we pause and go higher? Thus far, we've had a couple of pauses to go higher. We are clearly in overheating mode, but what a strong week. We'll talk more about that later. Since I think we're overheating, I've started to raise cash and sell some premium. Sometimes that comes back to haunt me when the markets go right through my out of the money call and I have to sell my position at expiration or buy back my call. But I do get the feeling that we've run very far, very fast, and maybe a pause at least is coming soon. Friday sectors, well, I mean, if there's a such thing as a sea of green, the only thing there is red are the other currencies. That's a sea of green, which is a very bullish picture. If we look at the major markets, as always, let's just go into Thinkorswim and let me maximize this. So I look at the futures because I capture the whole story. Here is the E-mini futures, and you could see a massive move off the bottom. The high of the market occurred right before the market rolled over. We have not yet taken over our highs, but we have. This would be January 1st, I believe. Nope, my bad. Yeah, beginning of the year is about right here, and we are almost back to the beginning of the year in the E-mini futures. So huge run up. I guess that's a V bottom, although we had a couple of periods of time where it looked like it might not be. Are we extended? Well, we're not that far off the 200, but if you look at how close these indices, the moving averages were for such a long time, we are getting extended numbers, as I will show you. I pay less attention to the high jump when we're not at highs, just to tell you that. So great move up. Let's look at the NASDAQ futures. Looks almost the same. Not a whole lot to say. Notice how the 50 is crossed above the 200. The 17 is following up with the indexes. Certainly nothing here that shows any evidence of weakness. The Dow futures, let's make this look like the others by, there you go, has taken out its 200, so it's not above, the 50 is not yet crossed above the 200, so this has come a long way, but it's still trailing the S&P and the NASDAQ. And then if we look at the Russell futures, this has been the weakest of them all, and they have taken over its 200. In fact, last week, and several of the last couple of weeks, the Russell has actually led the markets. If I look at the VIX, you'd expect the VIX to have come down. It's now sitting right above its 200-day moving average in an area where a bounce could happen, but we're getting closer, but we're still not where we were when we were in the resting phase on the VIX and a big move up on the market. And then if I look at the dollar, which I've said has been flat for a while, the dollar has dropped hard. Now, it may bounce from here, and the interesting thing is the metals, even though the dollar was weak, corrected as well. So I would have to say our markets look pretty darn strong right here. And let's go back into the PowerPoint. If I look at the weekly picture, you can just get a sense of how far, at least the top three, the E-minis, the NASDAQ futures, and the Dow futures have come back. The Russell lagging, but really made up a lot this week. And if I just think the strength in this market with the 17 above the 50, at least the 50 above the 200, the 17th has to catch up on the E-minis, but 17th above the 50 and the 200 on the NASDAQ. But the 50 is, and again on the Dow futures, at least that's the weekly. Let me just go back on the daily. You can see on the daily that the S&P, the NASDAQ, and the Dow are above their 200, although only on the daily is the NASDAQ futures above the 50. That's what I wanted to show you. Now, underneath, rates rocketed up this week. Look at this straight vertical move. Was that on reopening? Was it on employment? Whatever, it was strong. That means bonds probably fell. Not only were rates up vertically, but the small stocks and the large stocks, their AD lines, are starting to approach their all-time highs, and the markets with massive moves back up. If I look at the NYSE AD line, almost vertical up, not quite to its all-time highs, but look what's going on with all the major market ETFs except for this one in here, which is the bonds, which came down with rates going up. If I look at stocks above the 200-day moving average, we're right back into the middle. But look at the shorter term, the stocks above the 40-day and the 3-month new high, new low. These are in clear-cut time for a reversal or pause mode. So part of why I said is too bullish, bearish is we are extended on the short term, and it would not surprise me to see a pause to refresh. I'm not saying a test of lows, that could happen. I don't think so. I'm not saying a massive correction. I'm saying at some point I would expect a pause. Now, it's interesting, you do get individual sectors or industry groups pausing with really rapid and strong rotation in this market. The daily McClellan, what do I look for? I look for extreme on the oscillator or summation index. I'm not at an extreme, but I am getting pretty high here on the oscillator. not anything to speak about on the summation index. I look for a divergence. Well, let's wait till we get to the new highs. And I look for a zero line reject. I don't see any of those on the daily, nor do I see them on the weekly. Again, this potential move towards a extreme reading on the oscillator on the weekly, not there yet, but that's something to watch. Buckets, talk about extreme. 94% of the stocks in the S&P 1500 are trading above the midline of their Bollinger Bands. That alone is probably overly bullish. And then when I see that just about half the stocks in the S&P 1500 are trading above their Bollinger Bands, that tells me that we are getting exuberance and that we're going to see at least sideways motion coming into this market, or a pullback soon, to allow the stocks to come back where they're supposed to be, inside their bands. There is no Hindenburg omen, as you wouldn't expect, and frankly, when you look at the percentages of stocks at new highs, they're not exuberant by any means, so maybe that tempers the concern some. No surprise if you look at the Woody indicator, which is where my point is. All of these are green, so all the indexes are bullish. Notice the volatility that still exists in the market, which, if you've been following me for a long time, we haven't seen this really except the 08-09 time. Sector strength improved. All the sectors are green. And again, there's still some volatility in some of these sectors. Now, here's sort of a montage of Q, Sagar's tools. So first thing, let's look at 1 week sector performance. We have 1 day in magenta, 2 days in pink, and 5 days in maroon. Notice everything is up. Awesome. Then we have 1 month performance. Everything is up. And the leaders over the month certainly have been energy, discretionary. The leader last week was energy, and interestingly, real estate. Over here is the AD lines looking at sectors. 100% are positive. Industry groups, the majority are positive. And stocks, over 90% AD line is positive. So, advances to decliners. So this is a very, very powerful market. Here is a way to look at sector performance, and you can see at the end of the week, energy, real estate, and financials are the top three. Staples, utilities, healthcare, materials are weak. So if I was doing a top-down review, I might look at those first three groups. If I look at those first three groups, let's look at energy, and I hit the gears, I will open up the various stocks under energy, or various industry groups. So I picked several of them, and I looked at the peers, and these were the lists that came out. And from a fundamental perspective, by hitting the stars, I got a couple of stocks here that might look interesting from the fundamental perspective, AROC and ERA. I would probably be interested in looking further at AROC. I can't tell you anything about it, just fundamentally, it's undervalued. It's got EPS growth. It pays a big dividend. It's got short squeeze potential, and it's 40% off the high, but it's not at its low. So AROC is one. I'm going to write that down on my little black book of stocks, and I'll make sure that we take a look at it before we are done. That would be a top-down fundamental approach. Q is just an amazing set of tools. The downsides are you have to have Metastock data feed, and and you'd have to have a secondary charting platform, which could be Metastock, or I prefer HGSI. A sentiment, a picture of how extended this market is. We've triggered the high jump. To me, the high jump is when I go above 90% on the high-low jump oscillator. This is from EdgeRater. And you could see that so many of the major market ETFs, everything from insurance above, have triggered the high jump. None of the major sectors triggered the low jump. The low jump would be a oversold group. Now, a high jump by itself does not get you a signal. You need a high jump, plus you need to see a bearish signal come in, a red candle high, a low closed doji, a pocket pivot to the downside, a PSAR reversal, a mobile breakdown. I don't see that, but I think it just tells you that this market has had a big run. And look at that regional ETF, one that we point out, we looked at KRE. Canaries in the coal mine, as you can see, they're up 68% off their bottom. So despite the fact that this was a junk-led rally this week, everything went up. Just the NASDAQ and the NASDAQ champions, the big boys, trailed some of the small stock junk. And you could see we're approaching the prior high, and we are well above the January lows or January highs for this group. Junk off the bottom, here's my proof. Let's look at what led this week. Stocks that were automated John Person trilogy sells. These are usually the best stocks in the market, or the worst stocks in the market are the sells. Almost every one was up for an average of 18%. The bearish stocks out of Q, 95% were up for 13.7 cents. At 13.7% change. My bearish TradeStation stocks were up 13.14. The Omnitrader sell stocks were up 11.2. The weekend bears were up 10.6. My selected shorting candidates, 8.6 up. That's nutso. That means all the different tools that don't use the same criteria pick the weak stocks. The weakest stocks are the ones that did well. The S&P 500, which is broad, was up 4.91. The IBD 50 was up only 1.68. The weekend review was actually down a little bit. And my holdings, I had an okay week, were up 2.51, but as you could see, only about 60% were up on the week. So this was a interesting week where junk led. Now on the right, you can really see a picture of that. This is an edge rater taking the data as of 5/31 and looking forward based upon your criteria on 5/31 on your week return. And you could see if we eliminate the bottom two deciles and the top two, just because there's not very many stocks, it's pretty clear that the worse your fundamentals were and the worse you've been doing, the better you did with stocks and some of the lower ERG scores having returns over 40% on the week. So EPS rank, the worse your EPS rank, the better you did. That's not a growth stock week. The worse your relative strength, the higher performance. The worse your group rank, the higher performance. So this was clearly a junk off the bottom week, and we'll look at some of that junk before we get done today. It's important to know your news and your earnings. I think now the market's going to be looking for a couple of things. They're going to be looking for data that shows we're starting to heal. They're going to be looking for the Fed to say we're keeping our hands off until we see evidence of that healing, and we have a FOMC announcement on Wednesday. So that will be big news. And we're going to start to look at earnings reports as we start to cycle through earnings season again, looking for words of wisdom about how things are doing. So looking at the earnings this week, Coupa has been a big software mover. It's pulled back a little bit this week. Chewy is one that we talked about last week. I'm always nervous about holding at earnings. Signet Jewelers has been one that Sagar found that had a big move off the bottom. AMC Entertainment, movie theaters are starting to open up. The stocks are starting to move. Do you really want to go sit 2.5 hours in a closed space with people that you don't know? I don't know. That's up to you. I know what my wife would say. Got a little bit of retail stuff left with Children's Place and PVH. We got Adobe. So we got a nice mix of things. Maybe we'll get some sense if the recovery is starting. Market thoughts. We melted up into week's end as stronger than expected monthly jobs reports encouraged the bulls. Beaten down stocks lead on the week, gaming, travel, energy, REITs, while the broader indices try and catch up to the FANGs. NASDAQ for the year is up 9.4%. My returns up are between 35 and 40% plus, so I'm happy. Like I said, I had a good week, but not as good as the junk did. The rest of the indexes are below on the year. Market shows many signs of excessive exuberance. The high jump, as I showed you on those sectors, late day reversals on some of the junk off the bottom. You'll see a eureka, which when they occur after the extension, it sometimes implies a market is too excited. And then when I see the number of bullish stocks I look at the weekend are 5 to 6 times the number of bearish potential candidates, that's another sign to me that we're getting extended. So we're in historic moves off the lows. I'm looking for signs of exhaustion, expect at least a pause, but extended markets can and often do become more extended. So I plan on taking more profits, tightening my stops, and letting the market run while I keep a close eye on the exits. So let's take a look at what I'm seeing in the charts. I recognize that I'm 20 minutes in on this, but I think what the market's doing is the most important thing on my review. Now, just to give you a sense of the high jump and the extension on the markets, let me show you one of my favorite things. So this is a market chart that will be on one of my screens during the week. I may have a 60-minute daily and weekly, not a daily, weekly, monthly at the time. But let's look at the E-minis and the 6 different signals that I'm looking at on these 3 charts. This is daily, this is weekly, this is monthly. E-mini futures, first thing is it in a daily buy, weekly buy, and monthly buy? So we now have flipped to a buy on all 3 time frames. That's bullish. Is it a green bar, which is an Alexander Elder impulse indicator that says it's okay to be long or hold, but you shouldn't go short? Or is it a red bar, which says you should short or hold, not go long? Or is it a blue bar, which is neutral? It's green, it's green, it's green. Third thing is, am I at an extension in the envelope? Nope. Fourth thing, and this is the first bearish potential, is these red dots show me that my MACD here is diverging, where I've got lower highs on MACD but higher highs on price. So that's an evidence perhaps of less participation. But as you can see, the markets can go a long time. These are weekly charts over here where my arrow is before they roll over. I look down here, my weekly bongo is green. That's exciting. And then the other concerning thing here is, what is my high jump? My high jump in blue there is 100. So I'm at 100 of the high jump on the E-minis. In the past, when my high jump gets up to high levels, the market has a tendency of peaking and rolling over. So that is a concern. If I look at the Dow futures, these weekly, monthly buys is a new thing. It's a big thing. 100% at the high jump on the Dow futures. If I look at the NASDAQ futures, almost 199.77, similar picture. And if I look at the Russell futures, 100%. So if I'm at the most extended that I've been in over a year, because I'm only looking back 200 bars, what does that tell you about the market? To me, it says the market's extended, but it still can go higher. I just have to be concerned. Now let's go back to the E-mini, and let me go into edit indicators. I got to remember to fix this when I get done. Edit studies, and let's go into my high jump study, and let's customize it. And let's look back at 3 years. Let's look back at 1,000 weeks. Hopefully I don't break this. So going back 1,000 weeks. Nope, it doesn't want to. I didn't give it enough time. All right, hold on a second. I'm going to have to change this here. And let's go edit, symbol, 1,000 week. Let's go back 10 years on this. And then let's go back and edit the study. If I got 10 years, that means I can have 500 weeks. Is that going to do it? Nope, still not enough data. Study, edit study. 10 years should give me 500. I don't know if they give me, if I go back that far in the futures, but let's see. Okay. Going back, 500 bars. This is daily, not weekly. 500 bars, so that's 2.5, 3 years. I am at 100% on the high jump bar. So I'm not just the most extended that I have been for this year. I'm the most extended I've been for the last 2 years. So if you don't believe that this market is at levels that are concerning, I would differ. But that said, it can still get more extended. Just I know that if I see a big vertical move this week, I have to take money off just from experience. So that's where I find TradeStation to be very useful. Let's go look at HGSI. Yeah, for those who've never been here, you're thinking, how many tools does one person have? My wife asks me that same question all the time, especially when she sees my bills. Just kidding. My wife is great. She doesn't care. At least I can think that. Not, she is great, but I can think that she doesn't care. All right, so here I am looking at major markets plus. I have 27 different markets. I'm going to put this in a top-down view. And this is ranking it purely on price and volume, with one day being the largest contributor. And you can see here that S&P small caps, mid caps, Dow led. The S&P 500 was down here, number 17. The S&P 100, gold miners, volatility, the dollar down on the bottom. Let's take a look at some of these indexes and see if we get any thoughts of what this market is doing. Yeah, this is something that I wrote quite some time ago, and looking for a break up or down from this range, and it's broken up. Is that an exhaustion gap on the S&P 500? It might be. We've got eurekas that formed on it. Eurekas after a big move are bothersome. We had 2 eurekas in a couple of days. For those that don't know HGSI, that's a, well, let me show you what it is. This is one of Ian's gifts to humanity. Ian was such a great guy, passed away a couple of years ago. He taught us so many things about the market. I owe so much to him. And I really am happy I got to know the guy before his time was up. So Eureka looks at the AD ratio, volume ratio, and ARMS index. And on a very exuberant positive day, it will fire. It is essentially the follow-through day for HGSI users. And when you see them off the bottom, we saw one here at the bottom, a confirmation here, and we saw an early one right here. They are usually great signs that it's time to go into the market. Ian taught us that when you saw them at the end of a big run, they might be a little bit worrisome. So we saw 2 this week. So I think you have to be careful here. So great move. Here is the prior high. January 1st was in this range, so we're not quite at the new year, but we've had a big move. Look, it looks incredibly strong. It's just probably getting to the point where it's going to need to take a pause. I don't want to be Debbie Downer. Dow Jones Industrials, similar thing, has also perhaps an exhaustion gap there. We will see. Notice these eurekas will not change. They're on the NYSE. They don't change based upon what index or stock I'm looking at. Very strong looking. I mean, I don't know what to say except, wow. If I look at the Russell 2000, on the cash, it actually broke up above its 200-day for the first time since the market started to roll over. Also looks very strong. And if I look at the NASDAQ, which didn't have as strong of a week as the others, but still, how much stronger can it be? And you can see its relative strength compared to the market reduced this week as the S&P and other indices outperformed. So And the other thing is, look at where the NASDAQ is. The NASDAQ stuck its head into all-time high territory on Friday. I don't think it closed at all-time high. It's right up there and very close to it. So, wow, what a market, what a great recovery. I feel sorry for the people that stayed in cash. Somewhere in this area was a great time to be in the market. Now, I'm nervous. I'll let it go. I'll let it run before I capitulate and take profits, or take all my profits. I'm going to start taking profits. I started some on Friday. This market's had a major run. I've learned to pay attention to that high jump. The dollar had a tough week. This is called a bingo, which is a very exuberant signal to the downside. It bounced with a pocket pivot here on volume. These are to the downside pocket pivot, have dropped with that. It'd be interesting to see if the dollar stabilizes. My guess it probably will, with the economy seeming to be improving here, especially compared to worldwide currencies. But the dollar has pulled back. Volatility, as we talked about, has come down quite a bit, sitting on the 200, not to where it's been. See if it drops some more. Gold did not participate, and I guess with risk off, gold, a risk currency, perhaps came down. Gold came down. Silver came down. Looks stronger than gold, still above its major moving averages. And then gold miners also were weak on the group, but they might be sitting at an interesting place to buy, pull down to the 50 with a bottoming tail. So we shall see. When I looked at the index groups, remember what I talked about was junk off the bottom? Let's look at 2-day force, which is my momentum. I've got 96 groups showing positive 2-day momentum. I have only one group showing negative 2-day, and that was e-commerce discretionary. And you can see these are stocks that have done well during the modern era of COVID, but they gave back some, as it looks like perhaps some of the traditional retail and others may be time to run. So these were the only group that was down. U.S. Auto Parts, reversal, the real. So I think that was interesting by itself, but that was the only group to the downside. If I look at 5-day down, precious metals, biotech and specialty pharma on a broader picture were down. I showed you healthcare was a laggard, as was life science equivalent. Let's go back 5-day up. You can see 99 groups over a broader airlines, sporting goods, exploration, automobiles, REITs, cruise lines, banks, semiconductors. Well, several of those are junk. Or, well, not junk, but they were laggards. When laggards lead, it's not necessarily a good sign. Let me show you some of my concerns. Airlines. All right, I may be good at this. I may not be good at this. Let me tell you, one of my missed opportunities of the year. I did a 12-11 synthetic, Jeffrey synthetic, where I bought and sold. I bought a 12 call, sold a 12 put, bought an 11 put as protection, and I bought 150 contracts. It expired last Friday, and I decided not to roll it because the market had pulled back. Oh, if I only. Oh well. This is typical. American Airlines, huge week. All right, on the week, American Airlines was up 77% on the week. Look at what it did on Friday. It opened up with a massive gap, traded into resistance at the 200-day moving average, closed at its low of the day. What do we call that? That's pretty much a red candle high. I'm not sure why it didn't trigger it up here. High, and it's got huge volume. Notice where the high jump is. The high jump is pegged. And by the way, just a little tickle, George told me he's going to put my high jump, low jump into HGSI. I'm very excited. We'll have percentages instead of numbers that are meaningless. So that is a one-day reversal here. It's still bullish. It was a positive day, but it makes me wonder about whether we're going to, if that's a ice hole failure at a major moving average and we're coming back down to retest. That was American Airlines. United didn't get the same bullish move up to the 200, but it too failed on Friday. Delta, ditto. Spirit, ditto. Now, and then we have JetBlue failed at the 200. Do you really want to go out and buy this stock now? It may be the best thing ever. And listen to the guy that bailed at American on Friday before it went up 77% the next week. So I obviously was wrong there. I just think it's a high risk buy. I think you got to be in risk management here. You know, I'm a business traveler. I haven't been on a business flight for 3 months. And I did my first business trip this week, and I had a car service drive me across the state to Sarasota when I could have taken a 23-minute puddle jumper. So that's airlines. Oil. Now, I've got some oil stocks. Just look at what we see here. A little different. This closed near the high, this Hgsi Petroleum. It's got like 4 kahunas in the last 5 days. How bullish is that? Your weekly bongo went green. Your accumulation, you're coming out of a squeeze. How high does it go? Heck, if it's like American, does it run up to the 200-day moving average? That certainly would not be out of the question. Look at the industry group strength. I think that Hgsi looks interesting here. It's not because of fundamentals. It's because of stabilization of oil prices and the technical. Apache. I got some of this one. Popped up this week. Also looks extremely strong. Again, getting through that 200. Notice it failed the 200 here. It failed it here. It got above it here and came right down. That 200 is probably going to be a challenge. Chesapeake. That looks like it's had a lot of reverse splits. It has. I'm not going to play that one. Marathon, similar to Apache, gap up here out of a squeeze. Again, a very bullish looking pattern. ConocoPhillips, closer to the 200. One of the ones that I also am in besides Apache, what is this? This is OVV. I don't know this guy from Adam. It's a small player. I've got a position in Diamondback, and it looks like the rest. Nice move off the bottom. So AROC was one of the stocks that showed fundamental strength. And you could see AROC has already been running. I probably would be less enthusiastic about it, although it looks like it pays an 8.5% dividend. Wow, that's interesting. It's had a big run already, but still undervalued according to Q. All right, so what else do we got? Cruise lines. Oh yeah, we're all going on cruises. I wasn't kidding when I said I'm looking at motorhomes. You'd be amazed what you can get. They're even less expensive than a boat, but my wife told me I can't have both, so I have to decide. Royal Caribbean. I bought this about 2 weeks ago, 3 weeks ago, because of some Q signals. Look at this. Yeah, take out of the 50, a mobile breakout from the squeeze, and a kahuna. It's gone from 40-ish up to close to 77. Again, does anybody think that these are going to return to their pre-COVID highs anytime soon? As far as bookings and traveling, I don't. Look at those fundamentals, but this is what the market is buying. You have, and you know, what do I know? I buy what the market's buying. Carnival, similar pattern. Norwegian, Do I think these are going to go to all-time highs anytime soon? No, this is just people balancing out their portfolio, selling some of their extended tech stocks and buying some of this junk. Um, to me, they're trades. They're not long-term holdings, although maybe I should keep some of that Royal Caribbean as a long-term play. REITs, all right? I don't know about you, but my department stores and my shopping centers were closed. I know a lot of these companies are going bankrupt and not paying rent. Yet there was a lot of interest in Simon Property Group, which I acknowledge is probably the leader in shopping center REITs. Big move up off the bottom. Again, this is what I'm talking about. Junk off the bottom, giant moves. This does pay a 7% dividend if they can maintain it. Maybe I'm wrong, and maybe shopping centers will come back. Masaryk Corporation is another, I believe, shopping center. Beauty of Hgsi, it's got this thing here. Major retail real estate. Right? Is it time to buy retail real estate? I don't know. The other thing is offices. I mean, well, here's hotels. I stayed at a Hyatt on my business trip. There was no restaurant, there was no bar, there was no services, there was no room service. Let me tell you about housekeeping today in a hotel. Your room is clean when you get there. And then they have a sign on your bed that says, if you want clean sheets, strip your sheets, put them in a plastic bag outside the door, and we'll give you new sheets and towels, but we're not coming into your room. Not the glamour days of old, not that business travel was ever glamour, but hotels up off the bottom. Avalon Bay. This is interesting because you would have thought that a large owner of apartments would have trouble collecting rent during this, and certainly a pullback hard. I saw something where they collected like 98% of their prior year's rents, so compared to prior years. So maybe this is an interesting play down here. Mobile breakout from a squeeze, a breakout above the 50, a kahuna. Certainly a higher market catcher than at the lows down here. Pays a dividend of 3.6%. So there's a lot of interest in these REITs. Equity residential, similar picture. Welltower, a medical REIT, and I ranted and raved on one of my things about the Medicare stimulus that physicians received and why I was buying medical REITs, because they were getting plenty of money, they could pay their debts, at least specialties that built a lot to Medicare. Banks, we talked about KRE last couple of times, and you could see regional banks had a big move. Now, regional banks probably, there was some concerns here on bad debts, concerns about oil company bad debt, but they've had a major recovery. Maybe it's tied to the price of oil, but you could see moving up towards that 200. Here's PNC getting to the 200. What I currently own here is I have one that I own outright, which is Texas Capital, which has had a nice move off the bottoms, as have all the others. And as I told you, why worry about individual names when you can own KRE, which is the regional bank ETF that looks just like the stocks. Lot to like in that group. Automobiles, it's not just Tesla. Look at Ford. They're opening plants. They're talking about getting back to 12 million production in the industry. Okay. How are these people that have worried about their jobs going to buy cars? Maybe it's that $1,200 stimulus. But again, junk off the bottom, things that were at historic lows moved this week. Tesla, going sideways here. Is it ready to make its assault on 1,000? I can't buy it because it's too expensive, but it's very possible. Boeing's back. Well, at least it was back this week. Big move off of its bottom. And again, if you trade using my stuff, you had signal back here with a mobile breakout from a squeeze. You broke out 2 days later above your 50-day moving average. You had two pocket pivots, a kahuna. I didn't take it. I can't buy everything, but boy, did it have a move off that bottom. Some of the defense stocks, Raytheon, which is now RTX after its recent merger, big move off as well. Let's see what else I want to look at. Semiconductors. Now these are winners. Micron, which had been lagging perhaps for a while, broke out this week. Looks great. Here you go. Mobile breakout from a squeeze. A kahuna on a Eureka day took out the 200. You could have bought it at the open the next day and be up quite a few bucks. Micron Technology. NVIDIA, big run up, had good earnings, has gone sideways since. To me, it looks like it's getting ready for another leg up if the market holds up. Broadcom, up on earnings this week. Lots of good-looking stocks and groups. And let me just go to the major banks. Certainly seeing banks doing well has got to be good for this economy. And it's hard to believe that we'll get a full recovery without the banks participating. They did not close well on Friday. This is JP Morgan failing at the 200. Looks like an airline stock. This is Bank of America failing at the 200. Wells Fargo failing long before the 200. Citi failing right below the 200. I don't think the move is over on banks, and I think there was some profit taking clearly on Friday. But I'd like to see banks get above that 200 before I want to start committing a lot more new money. So what a market. What a comeback this market has had. It's unbelievable. It's historic. Let's look at my buy watch for the week. And there's a lot of stocks, but not a lot that I'm going to buy on Monday. So again, just to review what this list means. And let me just tell you how I generate it. Because I am a little bit nuts, to be honest with you. At least I think people think I am. I subscribe to Market Smith and IBD. So one of the first things I do is I create a list. I create a lot of lists from IBD and Market Smith scans. I create a list from some of my favorite OmniTrader scans, some of my favorite Q scans, and some of my favorite John Person scans and other scans in TradeStation. I put all the stocks from those lists end up inside a designer group that I call Consolidated Buys, of which this week there were 1,400. Typically there's 600 to 700. I then filter them for price and volume. I got down to 979. That is a massive number. I then looked at every one of those stocks, one at a time, to find stocks that I thought were potential watches, meaning there's a good chance that I think they're going to go up this week. And then I take this list and I stick it into, well, for example, I might put it into Market Smith, go into Market Watch, and let's change this to Buy Watch. And let's see, did I import them? Something did not work right. Let's see what I did wrong. Import, select file, buy watch. Why is it? Oh, I'm doing. Okay. All right, let me pause this and fix that. All right, well, it turns out you got to have something in the list for you to load it, so I had to just go out and load the list up. So here's the stocks I'm interested in. I've got them in a market watch, and then I have a number of my favorite indicators set up here. This is, well, it's a quasi version of Vantage Point. I own Vantage Point. one of my friends coded it into Thinkorswim. So I've been trying to see how close it matches to the actual product. This is a momentum screener, and when +1 are momentum to the upside, -1 are momentum to the downside. I don't want to see any momentum to the downside, so there's lots of stocks with lots of momentum. I've coded in kahunas. Green is a kahuna to the upside. How about HCDs and LCDs? HCDs are in gold. LCDs are in red. Pocket pivots. Bible gap ups. Then I got Dr. K's great tools. He's got a new thing called the combo ranking. Daily RSI, stochastics, and then I look for seasonality. Now, anything got really strong seasonality coming up? Dexicom. So Dexicom is an interesting stock. It's got the momentum, it's got a kahuna, it's got a long signal on the RSI. So let's take a look at Dexicom, just for example. And this is how I basically manage during the day, during the week. And you could see the seasonality prediction is going up higher there. And I mean, looks very interesting. Dexicom has pulled back to the 50, had a big day on Friday, big up move. This one is in a similar family as Tandem, which continues to work for me. Not bad for a stock I found for $5. Shallow pullback in the mid-80s. All right, so I use Market Watch as a tool to manage and watch these stocks during the week. In TradeStation, I use Radar Screen, and I've got a different Radar Screen in there today where I included all my stocks in with S&P 100, NASDAQ 100. And why do I do this? Because I can now go in the day, say, show me if any stocks have a Q bounce. These are bounce ups, bounce downs. How about a Q breakout? Nope. How about a box signal? How about a headwind? Dexicom had a bullish headwind. That's bullish. How about a new go with flow entry? Bearish and bullish. How about a reversal signal? How about green candle low or red candle high? How about a squeeze? How about a mobile squeeze break down or break out? How about a pocket pivot up or a pocket pivot down? How about a Bible gap up occurring? And seeing this immediately during the day, a lot of Bible gap ups. And a lot of these things reversed. Okay? And then, I don't know why that hasn't worked yet. I'll have to check and make sure that they didn't change the DLL. But I should have the earnings in there, and that's concerning. What I'll be doing is going to the gurus on TradeStation forum and probably having to update my my .dll, market catcher, and then John Person signals, so I can monitor my stocks that way. Back to my buy watch list. It's a wide mixture of a lot of different things that we looked at, some cruise lines. Let me see if there's anything here that I really wanted to point out. I mentioned that aerospace was strong. This is a stock I'm in based upon Q signals already. HWM looks like it's moving well. And if I go into TradeStation and I look at my Q, see if it's too late. So the backdrop is blue, a very big week, a new person buy signal, a gap up on Friday, the weekly bongo's gone. I see nothing wrong with HWM here. There was a buy signal back here, would have been even better. And frankly, back here. So there were a lot of opportunities to get in using Q, but this looks interesting, starting to run. Go back to the warehouse view. Here's a beaten down retail. Why would I buy it? Because if you think about what's been working, industry group is strong, MIG move up here, Kahunas, the time to have bought it was a couple days ago with the mobile breakout or the squeeze. Is this another junk off the bottom week? Are we going to go back to biotech, semiconductors? I don't know, but I want to be prepared. Application software, Dynatrace, I like this one, a little bit of a pullback into the 17, looks like it's ready to run. I can't buy coal stocks, there's just something fundamental that won't let me, but this thing keeps coming up on my screens. You had 2 kahunas in 4 days, a mobile breakout from a squeeze, a new person buy signal. This is CNX. I just, fundamentally, it bothers me, but maybe I should just ignore it. It's under accumulation. That looks interesting. It's on my list. That means I'm going to be considering it. Just trying to see the things that really looked interesting to me. Berry Global, starting to break out here. Actually has earnings per share growth greater than its multiple. Occidental Petroleum. I think we looked at this already. Probably a low risk buy on a pure play oil, and I think OPEC agreed to maintain some controls over the next week. Maybe Hgsi's in your future. It pays a 15% dividend. I have a hard time believing they can maintain that, but wowzer. Lot of interesting stocks. If I want a pure play, beautiful chart, what about Microsoft? A little bit of a base here, mobile breakout from a squeeze, pocket pivot, kahuna. I don't like the market catcher. Earnings are not until July, but Microsoft looks interesting here. Probably not ready to buy tankers again. And these things have a tendency going up and down, like dancing in a Darvis box. They're at the bottom of their channel, and I got a squeeze, I got a pocket pivot, I got a kahuna, and I've got a lot of demand and a lot of earnings per share. Again, these are not long-term holds. This would be a play off the bottom. I mentioned Dexcom. Here's what it looks like in HGSI. Pull back to the 50. That looks awesome. One of my favorite types of patterns. Look how much tighter it was back here, though. It's gotten a lot more loose. Neighbors, another one that's got beaten down, that's starting to move. I might worry that it runs into the 200, but you still got ways to go before you get there. I mean, some of the best times to make money are buying things that have been beat up that have life in them. And there's quite a few of those if you look at any of the stocks on this list. All right, I'm getting tired. I'll go look at one of my old players, Hgsi. This thing is pulled back to the 50. I like this here. I'll probably buy it back. Pulling back to the 50 and getting a new buy signal to me is a great thing. I'd rather go sideways before it goes up, so I may watch it, but Hgsi looks good as well. On that note, let me thank you all for watching. Please click subscribe, and I will see you guys probably next week. Goodbye, everybody. Have a great week.